Today, you'll learn 5 money moves most people skip, how to begin and build a simple plan, ditch money fog, and avoid the biggest retirement mistakes. We're going to hit credit, and we're going to also learn about cash flow, investing basics, and how to protect what you've built. Now, stay to the end for 5 actions that you can start this week. And if this helps, follow the advisor with Stacey Chillemi on Apple, Spotify, and subscribe, and YouTube at Stacey Chillemi Advisor. Drop a 5-star review so most people find it. Now, today I'm really excited because we have a very special guest on our show today. His name is Jeffrey Panik, and he is an amazing individual. He's written 2 books, and he is very in tune when it comes to financial literacy. I'm so glad to have you on the show, Jeffrey. Tell everybody a little about yourself, and let's jump into this because I'm really excited to learn more about what you're going to talk about today and tell the world about yourself.
Sure. Well, thanks for having me today, Stacey. I've been in the financial services industry for about a little bit over 25 years now. Before that, I was in the Army. I'm a certified financial planner, and I have a master's in financial services, and have my own firm that's independent. Really, I would say over the past 26 years or so, I've seen the good, bad, and ugly. And so really with the books, what I've tried to do is make it so that, I try to give examples, solutions for things that oftentimes I would say are like a financial jargon and a lot of big puzzles, trying to
Yeah.
put it all together, the pieces.
Now, most people say, and I know you've said it too, that you say most people don't need more spreadsheets, they need clarity. What does money fog look like, and what is one step to clear it?
Yeah, so I think, what I see with a lot of people is the hardest thing is really the first step, and really
Mm.
just even coming up and understanding how you even put all the pieces together. What is the first step? And it's usually a habit. The more that you can focus and just, as I would say, if you try to do something in a weekend or a day, you're just going to freeze up because there's so many different moving parts. And you may have to call and get a statement or figure out who the beneficiary is on an account. It may take you 3 or 4 hours just to do that. And at that point, you just say, I'm just done with this. I'm not going to get around to it. And, invariably, as you get older, time has a way of getting away from you. And, a lot of times I have people will say, well, I've been meaning to do this, but ends up in the end having some sort of a triggering event, whether they end up getting laid off or they start having health issues and they're forced to do it. And, when you're forced to do something, you can't really make any sort of changes. At that point, it's all about being reactive. And that is just not a good way to plan or work forward to have any sort of positive solution.
Oh, I agree. Now, if someone was listening and feels behind credit cards, no budget, what's a 90-day reset that actually works?
Yeah, so what I would, and one of the biggest challenges is technology, and from the perspective of just having so much information out there. And, whether it's talking to a friend or family member where they say, this is how I do it. Really what
Yeah.
I tell people with budgeting, it's really a good idea, especially whether you're starting out or approaching retirement, really to find 2 or 3 different things that work for you. Find one that you feel most comfortable with and just work through that. And, there's always things that come up, whether it's a new spreadsheet or a new system that you can use to become better organized. The main thing to do is start. Because I think a lot of times people will just get so focused on all the details that they don't really just do the hard, I would say almost the hardest thing is to start and work through the process and really
Right.
have a reasonable timeline. And in the retiree book that I've come out recently, I have what's called a financial life inventory plan. And really what it is designed to do is take someone from start to finish to really put their puzzle, the pieces, and put it together. And really, I view it as a blueprint where you can kind of work from. But, you have to have a reasonable timeline for every piece. Because if you say I'm going to tackle all my issues if you have debt in one weekend, it's just not realistic.
Yeah. Oh, I agree. Now, what's the biggest myth about high income equals financially set?
Yeah, so I think sometimes people will look at what someone's salary is or what their income is. If they haven't saved anything and they have a bunch of debt and they have 2 or 3 houses, it doesn't really matter what their income is. They're going to be paying a lot of it in debt. And, if you look at the interest payments that you pay over time, if you have a lot of money coming out, you have the salary coming in, but well, what happens if you either get laid off or you go into retirement? You don't have that money available to service the interest. And, in a lot of cases, making minimum payments, sometimes you pay two or three times whatever the item is that you purchased. And so really it's a good, no matter what you do, focusing on debt, you can have it work for you, but in a lot of cases, it's very easy for it to get away from you.
Oh, yeah. Now, when it comes to quick hits like emergency fund target and, and where to park it, can you give us some ranges and a simple place like, HYSAs and CDs and so forth?
Yeah, so I mean, I would say, really what you want to do is understand, and part of budgeting, that's really, I consider the foundation because it really gives you the understanding of how much you need, how much is coming in, how much is going out, what you can fix, because I run into people all the time that have multiple, I'll use the example, Prime memberships. If you have a couple, they both have memberships, they're paying 100 plus a month, they have
Yeah,
Netflix, and you start putting all these things together, they all add up, and
yeah,
really getting the budget together, working through, goes a long way in terms of going through and cutting through the noise and
right,
understanding really where the money is going. And once you understand that, you can work through understanding, this is what my expenses are. Typically a good indicator is 3 to 6 months. Well, if you have family, children that expenses can come out of the blue, it's often a better idea to have more than, say, 3 months of expenses. If it's just you, the 3 months is typically going to be probably pretty realistic.
right.
Once you hit that number, or when you have that number, you want to make sure you get the most out of it. And really, you want to have what I would call an operating account, which is your checking account, where you're paying, money's coming in, money's going out for bills. And then you have another account that's linked to it that's a high yield savings account. And the purpose of that really is to get interest on money that's sitting there for the rainy day. And I
Right.
would also say it's often a good idea to have a couple other accounts if you have a vacation fund or you have, you're looking to buy a car in a few years, you can have those kind of carved out. And once you have those fully funded, really it's a matter of looking at, whether it's an investment account. But the other thing I didn't mention was you always want to take advantage if you're working for a company and they have a match in your 401k, you want to make sure that's the first thing you do is, get that match. Whatever it
Yeah.
is, whether it's 3 or 4%, you want to make sure you're putting that in to get that money from your employer. That if you're there through the vesting period, which is how long it takes for you to, for it to become your money, that you're able to get that because that adds, certainly adds up over a period of years.
Oh, I agree. And it's funny when you mentioned the expenses in the beginning, a lot of times we don't realize exactly how much we spend. I remember, I was going over all my expenses and all little things, but boy, did they add up. And then when you think about if you have credit cards and sometimes we don't realize the interest they're charging,
Yes.
over the course of time, they increase those interests and we don't even realize how much we're paying. Some can be 28%, some could be 30%, some could be even a little bit higher than that. It's crazy how some of these credit card companies, operate. And if you add that up, you're basically paying the interest before you even pay the actual amount off your debt. And when you add up all those little things that you're purchasing, and you look at the end of the month how much you're actually spending on just, little things that you don't really know need or you can condense, it's unreal.
It is. And, unfortunately, the way the system is, in some ways, it's almost rigged because if you go to a college and you go to the bookstore, you'll find offers through everywhere. And you'll even find people offering to give the kids credit, credit cards. And, they're not doing it out of the goodness of their heart. It's almost like trying to get someone addicted to spending, because
Yeah.
once they start spending in college, they end up coming out with all this debt in addition to student loans. And then you
Hmm.
end up with the problem of not, what we have now, where you don't have the home formation. You have people that can't afford homes because they're spending so much money or paying so much, to service their debt, and it's a huge problem and not really being addressed the right way at this point.
Oh, for sure. And one of the biggest things I hear from our new generation is the student loans.
Mhm.
They are going. I know even know like family members that they are so stressed because they know once they finish their masters, when they come out, they're going to owe a lot of money, and they're like, that's what they're focused on. Like, how am I going to pay these bills? And between and then some of them defer it, and then then they end up really screwing themselves over
Yes.
because the interest rate they ended up paying twice or three times as amount of money that they should have paid when they first began.
Yeah, and it's a challenge. I mean, really, if you look at the ability to compound interest for yourself, usually the most compounding happens if you're able to put that money away from your in your 20s and 30s, because that
Yes.
sits in there for, 20 to 30 years and grows. If you don't have
Yeah.
that ability to do that, you're always behind, always trying to catch up. And, time isn't on your side as it relates to compounding. The more time you have, the more efficient, the more successful you're going to be growing a nest egg. And unfortunately, when you're having to pay off the student loans, and as you mentioned, even doing the repayment plans where you're stretching the money out further, you're just pushing out the amount of time and increasing the amount of interest that you're paying. And it's almost like they're acting like they're doing you a favor to do that. So it's quite
Yeah.
something.
It is. It is. Now, when it comes to cash flow, what's your simplest pay yourself first system so that savings happens automatically?
Yeah, so I mean, I think with most people, these days with inflation and expenses, really you really want to look at if you can save 10%, and some of that may be a portion of what your employer is giving you as a match. But if you can do that and you can do that consistently over time, the other side that I always suggest every year, if you get a raise from your employer, a cost of living adjustment, you want to try to transition that in terms of what you're contributing, increasing it, and just making sure that you understand that you're doing that consistently and what the outcome is. And one of the things I see with a lot of people, they don't really see what the end game is. They say, well, I don't really want to put $100 in this a month, or 200, or whatever the number is, because they don't really see what that would look like in 30 years. So I think sometimes it's always a good practice, whether it's if you have an adult child that's starting to work, it's always a good idea if you can kind of show them even a simple calculator that says, if you start today, this is what it will look like down the road. And it
Right.
used to be people would say, well, I know the government's going to take care of me. Well, very few people will agree on that these days, given everything. And it's really a matter of you need to take care of yourself and your family. And one of the biggest ways to do that is become financially literate and make decisions. And they're not all going to be obviously good. You're going to make mistakes along the way. But unfortunately, the system really fails from, there's only about 20 states that have financial literacy programs, as that are required to graduate high school. And a lot of those have waivers. And so you have kids coming out, they have to figure out, how am I going to buy a car? How am I going to pay for school? All these things. And there's no information on it. There's not consumer finance. It's just economics, these things that are, I would say, almost more antiquated, as opposed to things like, well, how do you open a checking account? That's a key piece of this. But, a
Yeah.
lot of times people are afraid to even do that because of just the confusion around it.
Right. And when it comes to debt, what's the best order of attack? Like high interest first versus debt snowball, and when, if ever, if it makes sense to keep low rate debt.
Yeah, so I mean, I would say, ideally speaking, you want to go after the highest interest first, and you want to
Mhm.
focus on that. There's some contrarians, and I think it could be good too if you have small wins, and that's attacking the smaller cards first, even if they're not the highest interest. That
Right.
way you're getting those paid off. Really it's a matter of just doing consistently and then shifting. When you pay one off, you increase payments on the next, and you kind of work from there. And really, I compare it to like triage. If you have someone coming into an emergency room, you want to understand really what's fully a matter with them. And you really want to do that with debt. You want to look at your payments, you want to look at what the interest rates are on the cards, and you want to look and say, well, how can I get this down as quickly as possible so I can start paying myself, in terms of saving, as opposed to paying these companies interest on money that, I borrowed in some cases a long time ago.
Right. Now, when it comes to invest in basics, like for someone who's starting with index funds in a 401k or IRA, what's a plain English allocation approach and the top two mistakes to avoid?
Yeah, so I think the biggest mistake to avoid starting out is just being too conservative. I think,
Mhm.
if you're in your 20s and you have 40 years or 50 years before you're going to need to take the money, you want to
Yeah,
be aggressive with the funds and put it in there every month. You're dollar cost averaging, you're taking advantage when the market drops, you're able to buy more shares and watch it go up over time. The other thing is don't react to the news. That's the one thing where everything these days seems to be sensationalized. And a lot of times people will make decisions at the absolutely wrong time. And so
yeah,
it's important, understand what your risk is. And at the same time, if you have plenty of runway in terms of, before you're going to need the money, you're going to want to be pretty aggressive with it. The good thing about a lot of the plans, they have what are called target date retiree funds that'll allow it to be managed on your behalf. And so,
yeah,
oftentimes that's a good starting point because you can just kind of not think about it, but it's being taken care of for you. And
right.
so, the main thing is to start saving, save through all these issues, and time has a way of taking care of compounding and interest and growth. As I mentioned, where you get into trouble is if you try to make changes at the wrong time. Typically, that's when, you're going to look back a year or two after that and say, well, I wish I would have just stayed in the market.
Yeah, for sure. I like that answer a lot. Now, when it comes to taxes, what move most W-2 earners miss that they could save money each year on?
Yeah, so I mean, I think, as you get it, the real challenge for people that have W-2 income without any rental properties or any other type of passive, any income that they can use for purposes of deductions is just very complicated. The one thing that you always want to do is understand there's a fine line between trying to place as much into your retirement account. The good news is, and what I suggest for people these days, given where we think potentially the taxes are going to go in the future because of all the national debt and all the, challenges we have,
Yeah,
would be really to consider looking into see if a Roth 401k option is available. If you're in your 20s, 30s, 40s, you have 15, 20, 30 years, paying the taxes on the money now, putting it into the Roth, could be definitely a good option for you. Also, taking advantage of HSAs, being able to put the money in there if it makes sense, if you don't have certain health issues, and benefiting from growth there as well, so you can have that money grow for you additionally.
yeah. Oh, that definitely. Now, when it comes to protection, like what core risk protections belong in a basic plan? Is it emergency fund, adequate insurance, beneficiaries, and cyber hygiene?
Yeah, so I would say if you look at one of the risk with to your, not having the emergency fund, and a reason why a lot of people, the biggest component of debt is obviously student loans, but another is medical debt. Just because the people typically, in a lot of cases, they just get the cheapest option, which may
Yeah.
not be the best thing because you end up with a lot of co-pays, deductibles, co-insurance, where your out of pocket can be pretty significant. So then you're paying money to pay down other medical debt. So I think that's a risk that needs to be acknowledged to understand, what your health is, what your prescriptions are, to come up with really a plan that you're either your employer or that you can find to try to get the right amount of balance between what you're paying out monthly versus what you might have to pay. The other is you mentioned, just identity theft, really focusing, making sure your credit is frozen. If you have children, making sure their credit is frozen. If you have, aging parents, making sure their credit is frozen. On either end, you're going to be the one in a lot of cases that has to deal with the repercussions if it's not. Those two groups, minors, young adults, and children and seniors are the two biggest victims of identity theft. A lot of
Yeah.
times because no one is really, their credit's not frozen. No one's, they don't have a credit file really so no one's really thinking about it. And
Yeah.
their information is everywhere, whether it's school or whether it's the doctors, so everything is out there and it's very easy for their information to get in the wrong hands.
Oh, yeah, for sure. You see that all the time, especially nowadays. Everything's put in the data system. It's so easy to get your name blacklisted and get into those areas. And so many people, especially elders, you see all the time. People call up, they know information about them, they mention things. I know that my mother, someone had called up and had mentioned my son's name to her. Oh, he's not doing well, and he needs you to, transfer this X amount of money. And my mother called me right away. She hung up, and I'm like, no, 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 calm down, mom. That didn't happen. And it scared the bejesus off of her. And she was, but the person on the other line knew all her information, knew what her grandson's name was, and that's how a lot of people fall into these traps. And you hear all the time, people have lost tens of thousands of dollars, with these scams.
Yeah, and and I think that's important. You hit the nail on the head. Really, you want to have an open line of communication with all of these things with family because I mean, a lot of times your parents can be guarded. It's important to let them know as well as just the young adult children, if they're not sure about something, they need to call you. The first thing rather than clicking the link or actually providing information is to take a step back and
Yeah.
really, you can always call the person back if it's legitimate. And I always say, as an example, somebody calls and says they're from American Express, it's easy enough just to say, well, I'll just call the main number, hang up, and then call American Express directly with the number that's on the back of your card, as an example. Or the bank is the same, same case. So, I think it really, but again, as you mentioned, people call, it's very believable, and they put people really in that typically they can put them in a really bad place and really leverage and try to take, obviously a lot of criminal acts that happen along the way because of that.
Yeah. Oh, for sure. Now, from your book title, Solving the Retirement Puzzle, what pieces do people ignore until it's too late, like income plan, healthcare, sequence of returns, risk?
Yeah, so I mean, I think one of the things would be, there's a few. There's one is debt in retirement. I think
Mhm.
that's an important thing really to tackle when you're, say 3 to 5 years out, to really fine tune and understand what debt makes sense to potentially bring into retirement and what debt to focus on. The other is, saving for shortfalls, Social Security, making sure you don't do what your neighbor, coworker does, what's best for you. Even with, we are talking about healthcare, a lot of times people will say, well, I'm just going to go on Medicare because it's free. Well, guess what? In a lot of cases, if you have a good employer plan, you're going to be saving a lot by just staying on the employer plan than going on to Medicare. And, unfortunately, as much as you've paid to Medicare and your employer over your lifetime, you're going to pay even more in retirement. And so, it's important to understand that a lot of these things, decisions you're making are irreversible. So it's important to take the time and understand what each decision, the outcome will be, and what the consequences are, so you can make as informed decision as possible. And really, you don't want to get it to the end where you're reactive and you're sitting there waiting because you had a health issue and you're having to just scramble around trying to figure out what to do. As difficult as it is and as confusing as a lot of these things are, if you can do something where you take the time, maybe over a year to 18 months, and work through all these pieces. And some of it isn't what you would traditionally think, even, making sure you have the right type of car insurance, making sure you have, an umbrella policy to protect yourself. If you've accumulated all this money and someone sues you, you want to make sure that you have something there to protect yourself, from a liability perspective.
Oh, yeah, that's a great answer. Now, for parents teaching kids money, what's one habit that creates lifelong literacy?
Yeah, so I think one of the things, well, there's a couple things. I mean, one of the important things that I see is just having, we talked about it before, an open line of communication, as well as sharing some of the things that didn't work out so well for you. Because if you can talk about the mistakes that you made, they're going to be much more open-minded to come to you when they have an issue and
Yeah,
acknowledge that there may be something wrong or there may be a mistake. The other is just simple things like I use the example, around the holidays, it's always a good idea, put down the phones and maybe
yeah,
play Monopoly or Life. If you play the game of life, it's just quite, it's a little bit exaggerated, obviously, when you have 8 or 9 kids, 8 or 9 people in the car, you have 2 cars, but some of it is realistic, really, where how you have to manage debt, manage everything, and you just can kind of talk through it with them. And
mhm,
really, a lot of it just has to do with spending time off your phone, TV, and just sitting there talking about life. And if you can do that, I think it's much easier to have, communication that's actually a positive and that's actually going to get them where they need to be in life, especially with financial literacy. That can be just a very difficult conversation to start, or even, one sitting there talking about how not to rack up a bunch of student loan debt. It's a matter that conversation needs to start not when they're 17 or 18 and they decide to go to somewhere to school. It needs to start when they're 11 or 12 and really talk about community college, AP classes, doing everything you can to get as many credits if you want to go to college as possible, where
Yeah.
it's on someone else is paying for it as opposed to you.
Exactly, exactly. And that's one of the things that I think a lot of people lack is they don't plan for these things, or parents don't teach these things and really make, kids aware. And I think it's important that parents get more well educated in this field as well, so we can pass this information to our children so they don't have to suffer as they get older and they're actually prepared for what's ahead in the future. And even though retirement seems like a long way down the road, as we know, time flies
Yes.
and before you know it, we're coming close to retirement and we're like, wow, did the time go? And we really have to really think about what's ahead and how we're going to protect ourselves because so many people that I've known have, come to the end where retirement is here and they have less than $5,000 in their bank account, believe it or not. And they just, and they're just living day to day and relying on family members. And nobody wants to have to do that. Sometimes we're forced to, but this is something that we want to try to avoid and educate when people are young so they don't have to go through this.
No, there's no question about that. And I think, if you can, and it's not to teach them every single lesson, but it's really, really the biggest thing is the better that they can learn how to manage debt, and
Yeah.
they're going to have just more disposable income, and that disposable income, rather than going to interest, can go to actually, that they're paying on a card, can go to interest that they're putting into an account and getting compounding and growth over time. And I compare life to, financial life to like a marathon. And, some people start out at mile 6 or 7 because
Yeah.
they have parents or family members that have educated them where they're a little bit further ahead. And then there's some people, the gun at the start goes off and they're just standing there, for years trying to figure out where to even, what direction to even go. And, and the education system does just a horrific it's just horrific as it relates to consumer finance and trying to help the kids along.
Exactly. Now, when it comes to legacy planning, what's the one step for someone who's never updated beneficiaries or created a will?
Well, I think the first thing that you need to do is look into your family situation. The first thing you need to do is designate the beneficiaries and make sure they're up
Mhm.
to date. If you've gone through a life event, a divorce, death, birth of a family, a child, you need to make changes and adjustments. You also,
Yeah.
if you have a will in place that's 15 or 20 years old, it probably needs to be updated. If you have an agent, an executor, trustee, someone that is going to be there handling things if something happens to you and they're not in the picture anymore, or they're not
Yeah.
willing to do it anymore, you need to replace them. The cost that you pay now is just a fraction of what it would be as if you have to go through either getting a conservator if you can't handle things anymore, or having the court, via extensive probate. So I think, the more that you can take care of things on the front end, the easier you make it on your loved ones if something does happen to you. And the chances of becoming incapacitated are pretty great prior to death. So you want to make sure you have the proper documentation so your bills can be paid, so the person you specifically want handling things will be able to do that. And everything has gotten so complicated. That's especially true with the legal system. So you want to make sure you have the correct documents, and you always want to review your beneficiaries to make sure they're correct.
Yes. Oh, definitely. Now, you work with families, executives, and entrepreneurs. What separates those who actually feel confident from those who look good on paper?
Yeah, so I think it's just understanding where you want to be. not just, sometimes people ask me, well, what's my number? How much income do I need?
Yeah.
Everything is very generalized, and it really is a matter of just taking the time to understand what your goal is. And for most people, I look at it really as part of it is understanding, really taking an inventory approaching retirement, not just with your finances, with your health, understanding what your family situation is, how it could be improved. A lot of times people will work and they focus so much on work that they really don't focus on family. And, one of the benefits of retirement, if you go into retirement healthy on your terms, you're really able to make a lot of changes, whether it's spending more time with family, focusing more on your health and doing things that will extend your life and I believe bring happiness, and even focusing on specific goals, looking at hobbies. You want to do all of these things really before and have a plan in place before you go into retirement so that you can feel pretty comfortable and understand where you're going. And you're just not sitting there kind of lost, giving up good years of your life trying to figure out even what direction to go.
Exactly. Now, what's one expense most people should cut out this week?
I would say if you could stop going to Starbucks at least once or twice a week, or some variation, maybe if you don't go to Panera, or just if you look at what you pay there and you look at the cost of how much that has gone up, if you can just redirect even a small part of that on a weekly basis to pay down debt or save more, you really want to look at what that would mean, say, over 10 or 20 years. The other thing is, if you have a bunch of money sitting in the checking account, really is a good idea to make sure that you put it in a high yield savings account or do something with it where you're going to earn more interest rather than just giving the bank your money, and not really getting anything back in return.
Exactly. Now, what's a credit score myth that you want to retire?
What's that again?
So like, a lot of times, like a credit card score myth that, when you want to retire, what your credit card score, should be.
Yeah, so I mean, I think it's more what, you get into utilization, you get into people saying, well, I don't want to have any debt, zero debt, and then they don't really save anything.
Hmm.
Some people argue, you should have, if you don't have any mortgage or anything, you open a zero home equity line so that you have money available in case there is an emergency. Really, it's specific to what your circumstances are. And really, there's a balance there where you have to look and say, well, obviously, if you're paying 25% on a credit card or 18 or 19%, it's probably going to be a good idea to try to get that down before you hit retirement. But
Yeah.
certainly, closing all the accounts also doesn't make sense because then, you start to lose a situation where what happens if you do have to get credit? And so
Yeah.
it's a fine line. And it really, in the book, I kind of there's like an equation that's used as a percentage of how the credit card companies, or not the credit companies, really, which are Experian, Equifax, and TransUnion, how they come up with your credit score. And it's not the easiest thing to kind of work through, but what
Yeah.
ends up happening is it's more of a matter of just having, the more that you have control, typically the better your score is going to be. The more that
Hmm.
you feel things are out of control, the more your credit score is going to get away from you.
Right. Right. Now, you've written two books. You've just recently launched one. Can you tell us a little about the books that you have written?
Yeah, so the first book was written for young adults because of just the confusion around literacy, really just providing a framework for someone getting out of high school or college or trade school where they can look at and really work through as a reference different decision processes, whether it's getting car insurance, whether it's buying or leasing a car, whether it's, how do you put money away and how do you save for a home, and then how do you get a home loan in the first place, or how do you manage student loans if you have them? How do you put money into your first account, your 401k? How do you
Yeah.
do all these things? How do you develop a budget? And so it's set up there to try to take that where you can use it as a framework to work through as you get older, so you can kind of go into adulthood in the right direction. And then the next book is really for someone that's approaching retirement. Really, I compare retiring to really kind of moving, where you've lived somewhere for 25 or 30 years. You have all this stuff. How is it going to work for you? What do you keep? What do you get rid of? what does it all mean in the big picture and scheme of things? And what I try to do is put it together. And really, I have this financial life inventory plan where I work, it really shows someone how to put everything together over time, really emphasizing that you can't just do it in a weekend. Really, you want to make it a 1 year, 18-month process where you really fine tune everything and you get your plan where you feel very comfortable. And if you can feel comfortable, it really takes away a lot of the stress that as people approach retirement of uncertainty.
That's great. Now, where can people find these books?
Sure, you can. Their books are on Amazon. I'll also send you for your readers the first book. I'll have a PDF where it's a free book. So the
Mhm.
first book I have where they can download it as a PDF. I think it's a helpful resource. The books also have QR codes in them. So if you have if even budgeting, saving, there's calculators throughout that are helpful because it really kind of, sometimes they'll say, well, how do I find a calculator for that? All you do is just scan it with your phone and it'll pull right up.
Oh, wow. Now, Jeffrey, listeners were promised 5 concrete actions. What 5 things can they do this week to raise their financial IQ?
I think the first would be really to take a step back and really make a list. And everyone's list is a little bit different. But the first thing before you can do anything is really understand all the pieces that you have. And
Right.
then, kind of getting back to like the triage emergency room type of analogy, really what you want to do from there is really attack the pieces that are, in some cases, the easiest. You want to mix in some of the hard and easy together so that you can
Right.
have wins. That's the one thing where if you focus on the thing that is the most confusing first, like you mentioned, legacy planning, it gets difficult. You can get bogged down in whether you want to, no one wants to talk about usually whether they want to be buried or cremated, as an example, or who they want to give their eulogy, so sometimes things like that, probably take a little bit more thought than saying, well, I'm paying 20% on this card and I have a significant amount of money in checking. Shouldn't I just pay that off? And
Right.
sometimes the way everything is automated with the auto pay, people just, they just pay without even looking at what they're paying with. Uh, so,
Right.
really looking at it, I just think really organizing, coming up with a strategy that will work from the beginning through all the different pieces. And again, whether you go online and look for strategies or the strategy in my book, really it's a matter to take inventory because until you know what you have, you can't solve and you can't get a solution.
Right. Now, what services and products do you provide?
Sure. I do financial planning and advisory, and typically what I'll do is sit down with someone, get an understanding for what they're trying to do. Whether or not I can help them, I'll provide them resources that can help them get their questions answered. Because a lot of times it's hard, even with Google and all the technology, it's often hard to find things to get the solution that you're looking for in terms of getting what you're trying to solve.
Yes. Oh, 100%. Now, where can people find you?
Sure. My website, jeffreypanik.com, is a very helpful website. There's videos. There's also additional information there that is typically going to be helpful. I have videos on all kinds of different financial topics. Mainly, the point and purpose of it is to really help educate you. And I always say the more you know, the better you're going to be in the end, and the more informed decision you can make.
Oh, 100%, 100%. And are you also on the social media?
I am on LinkedIn, YouTube, Facebook, and I'm always available there. You can always search. My last name is unique, Panik. So if you put that in Jeffrey Panic, it's pretty easy to kind of pull up, and my information comes up.
Oh, this has been amazing. You know what, Jeffrey, I'm so glad you came on the show today. You really shared a lot of valuable information. I think you gave a wake-up call to many people too, because people are interested to know, people don't know, and people don't know where to begin. And there's a lot to, inhale and understand. And especially, like we said, people don't realize that we should be planning way ahead than what we actually are. And then we get to moments in our lives where we just postpone and procrastinate, and then everything hits you at once, and you don't know what to do, and you find yourself in a financial situation that's not a good one. And so I'm glad you came on the show today to really share this. I think there's even more information we could tackle and go dive deep in, because people really need to understand this step by step and really understand the importance of planning and really protecting your as we get older, our retirement, our money, where is our money going, and really how to protect ourselves and our family members too, because there are so many situations where it's not just the person being affected, the whole family gets affected
Yes,
also.
no
So
question.
these are definitely important, valuable topics, and you've covered many of them today. You gave great answers, and I'm so glad you came on the show, Jeffrey. You are just amazing. And I thank you very much for taking the time out to explain this to our listeners, because this is something that people really need to dive deep into and make sure that they are doing it the proper way, and make sure if they're not doing it, that they need to start doing it.
Yes. No, and the first step is really you want to start, and you just want the hardest thing is to begin and start the process. And that's typically going to be the hardest thing, because it's a matter of finding the information of how you even begin.
Yeah. Oh, for sure, for sure. And one thing that when you were talking, I thought of myself too, is a lot of entrepreneurs, a lot of business people, a lot of people who own their own practices, even they're so involved in their work that this is the last thing they really focus on. And that really, really kicks them in the tush at the end, because it really, when they really need to be planning, and they look at what they've done, and how close they are to retirement, they realize that I haven't even begun. And like, where am I going? Because, it's a totally different world for entrepreneurs and business owners and doctors and people who have their own practices, lawyers. And, these are things that we have to really understand and plan accordingly. So I'm so glad you came on the show, Jeffrey. And I thank you so much with all my heart.
Thank you so much for the opportunities today.
Thank you. You have a great day.
Thank you.